Gold is in a 50-50 trend, seems like a downtrend and an uptrend, really hard to get a bias. Okay, Harry, that's a very, very good question. Very good question. Gold is in a 50-50 trend, seems like a downtrend and an uptrend, really hard to get a bias. So Harry asked, it's really hard to get a bias. Let me clear my throat over here first. Okay, so take out your pen and paper or whatever you want to do. I'm going to explain how to get a bias when there's a 50-50 bias, right? Okay. Are you guys ready? Ready, steady, go. First of all, we look at the daily time frame, right? So I'm going to remove all analysis, and please don't ask any questions. I'm going to remove all analysis, and I'm going to look at the daily time frame. Now, looking at the daily, we don't know where this current daily candle is going to go. I mean, we can anticipate that the candle can go up. We can anticipate it can go down. So that means it's a 50-50. It's a 50-50. Whatever that word was, and we need to understand where the bias is at this point. Right now, it's like it's a 50-50 bias. Okay, perfect. Let's go into the smaller time frame to get some more information. So the key word is let's go. The key phrase is let's go in the smaller time frame to get more information. So we're going to go to the 4-hour time frame. Now, looking at the 4-hour, we need to understand what the 4-hour candle did. So this is me just doing the breakdown again. So 4-hour created a resistance, right? Now, I'm not going to take a look at the 4-hour like this. You know, this is what dummies do. I mean, if you get offended by this, sorry, but you're just a dummy. If you're looking at a chart like this and you get anxiety over looking at the 1-minute candles, doing this is not going to help you at all. So this is what 90% of the YouTube teaches, and though they draw trend lines and mark up Batman patterns and fucking Spider-Man patterns, they don't work. So we're going to zoom in. We're going to zoom into the candles, because if you can't read candles, you can't trade. Okay, so we're going to zoom in. Now, we're going to see what the candles did on the 4-hour. 4-hour candles, they moved up. Okay, so we moved up and we created a high at 1857. Right, we created a high at 1857. Perfect. Now, the rule of market structure, write down this rule. The rule of market structure is whenever price makes a fresh high or a fresh low, there's a very high probability that that high or a low is going to get respected, or is going to get retested. Sorry, right? Whenever we make a high or low. So the 4-hour, it made a high around 1857, right? And if it has to be respected, what do we want to see on the market structure side? We want to see some sort of a support, because if we want price to move up to retest this high, we want price to create some support, so we can say that, oh, okay, we formed a support, and that support is going to support our idea of price retesting that high at 1857. Now, also remember, right now the bias is 50-50. Right now on the daily, but on the 4-hour, we see that it could retest that high. Now it's going to retest the high, but the current 4-hour candle is bearish. We're like, oh, okay, now let's investigate again on the smaller time frame, which is going to be the 1-hour time frame. So we drop down to the 1-hour time frame. Now on the 1-hour time frame, notice the zone we had on the 4-hour, it's overlapping the 1-hour candles, right? So we're gonna make this better, bring it down on the 1-hour. Now we're gonna plot our support resistances on the 1-hour time frames. On the 1-hour time frame, we have this support right here. Right now, the 4-hour bias is that we need to retest this high. But now we gotta ask ourselves, does the 1-hour candles, or does the 1-hour time frame support the 4-hour bias? So let's take a look at that. So the 1-hour candles are moving down, right? We also created a resistance here on the 1-hour time frame. So for the 1-hour time frame to support the 4-hour bias, we need what to be formed on the 1-hour? We need a support to be formed on the 1-hour, right? And if we form support on the 1-hour, then we need price to break above this resistance, 1850, to continue up towards 1857. Now, since we have this resistance, what will make price break resistance? Ask yourself this. What's going to make price? Yeah, exactly. Volume. Volume is going to make price break resistance. Now you look at your time, you're like, okay, we're in pre-New York. If price does not break that resistance in pre-New York, when's the next time there's going to be volume in the market? New York Open. Right? So if we do form support and price comes close towards 1850 and the time is close to New York Open, then we can say, okay, there's a high probability that in New York Open we can break above 1850 and we can retest 1857. Now see how slowly we're moving from a 50-50 bias to something that we can slowly understand, right? Now we got to drop down to a lower time frame, which is going to be the 30-minute time frame. Now dropping down to the 30-minute time frame, remember this resistance, this on the 30-minute time frame, it overlaps the 30-minute candle. So what we got to do, we got to adjust it based on the 30-minute time frame. There we go, right there. Right now 30-minute candles are coming down, we're kind of like rejecting. If we form support on the 30-minute, if we form support by the next candle closing bullish or breaking the high of the previous bearish candle, then there's a high probability for price to go up to 1850 or 1851, right? And if we get to this level by NY Open, then there's an even higher probability for price to break above this area and continue on towards 1857. Understand? So that's how you create a bias. Now, for example, if we don't form support, and price continues pushing down, we just need to wait for support. That's it. Just gotta wait for support, right? But if price pushes, now this is where you need to put both perspectives in mind, right? So now, right now, we only looked at buys, right? Now we gotta take a look at sells. What will make price go down? If we come down and we break below 1841, then there's a very high probability price is going to continue pushing down. Now, it's very important to wait for price to break below 1841 because you have clean candle here to the left hand side. If price breaks below 1844 and come into this area, this is a rejection area. If price comes in this area, there's a chance it can reject. So now you got to ask yourself, where are your sells much more, where are your sells really easy? Are the sales really easy below 1844? Or they're really easy below 1841? The challenge comes for you to wait, right? Patient traders are going to wait below 1841 because you have easy sells. Impatient traders, losers, 90% people who lose and lose and lose and doubt the people who are profitable, they will take sells at 1844. Price will come down in profits. It will probably reject and they will lose. And the people who win below 1841, they will turn around and say, oh, this guy fucking manipulated his results. That's exactly what happens, right? So you got to be patient. You got to be patient and you got to wait. So I guess this last 10-15 minutes is a education session. Well, it was an education session for you to learn how to create a bias going from the high time frame down to the low time frame. So go and give a like on the stream. I'm gonna give a thumbs up. Right now it's 195 likes and now it's 196. Oh, it's 199. Awesome. Go and like the stream. So now you just gotta wait. You just gotta wait. So this is when they say you have to wait for price to come to you, which means you have to wait for price to print something that you want price to print. You know, don't just execute on something you don't want to execute on. You know, just like taking a bad deal when someone puts a gun to your head. Don't do that.